Hello, my name is Keith Dreyer, Vice President and General Manager of Henry Schein Schools and Specialty Services. I'm honored to be responsible for Henry Schein's dental school relationships and our dental school and student engagement programs. We're proud to bring you this timely webinar on the state of student loans. This topic is relevant to new doctors, dental school students, residents, and parents. Many attendees are parents of dental school students and/or parents of college graduates overall with student debt. This topic and today's interest rate environment make this a hot topic for so many. I'm pleased to introduce Lucy Manzo, our special guest today. Lucy is Vice President of Student Lending at Citizens Financial Group. Lucy joined Citizens Student Lending Growth Strategies team in January 2020. Most of Lucy's career has been in higher education finance, working to help students and families make their investment in higher education. Lucy works closely with the higher education administrators and students to promote financial literacy and highly indebted professionals to help them develop successful strategies for repaying their student loans. After the presentation, I will be asking Lucy a series of questions. Lucy, thank you for being with us today, and please take it away.
Thanks so much, Keith. Appreciate the warm introduction there. We at Citizens are really excited about our partnership with Henry Schein because it's dedicated to helping Henry Schein dental clients and students with their education financing needs, whether that's, managing your student loan debt or actually paying for college. We have over 40 years experience in student lending, and we are a national lender. On the screen here, you'll see a dedicated microsite for you to get more information about our partnership with Henry Schein after the webinar. And you can do things like get a free rate quote from that site, get more information, and even apply for a loan if that's something of interest to you. One other thing I would point out is that we have two US-based call centers, one in Pittsburgh, Pennsylvania, and there's one in Johnston, Rhode Island. And we have staff available Monday through Friday from 8 a.m. to 9 p.m. Eastern, and then also on Saturdays from 8:30 in the morning until 5 p.m. Eastern. And the staff is really there to answer any questions that you have. Again, we have over 40 years of experience, lots of expertise in education refinancing. Many of you are highly indebted borrowers. You have a lot of loans in your portfolio, and it could look pretty complex. We can simplify that. We're here to answer questions. And listen, if it doesn't make sense for you to do an ed refinance loan, we'll say that to you. We'll help you out. So, hopefully you'll benefit from this session. And let's get on and look at the agenda here. So we're going to talk about the state of student loans today. We'll talk about the impact of student loan debt on all of us, what the CARES Act means for you if you have federal student loans in your portfolio. We'll share some strategies around that and also some other factors to consider when thinking about consolidating through the federal government or doing an education refinance loan. We'll share some information about the exclusive benefits that we have as a result of our partnership with Henry Schein, and then we'll tell you what you need to get started. So the headlines lately have been about student loan forgiveness, but student loan debt has been in the headlines for quite some time. And I think even more recently, maybe student loan relief. And so some of that is due to the COVID-19 pandemic. Some of it is due to President Biden's platform. And then largely it's due to the overarching impact of student loan debt on all of us. The reality is that student loan debt impedes and in many cases, delays milestones for people, things like getting married or buying a home, purchasing a practice, saving for retirement, or saving for children's education. it's really a challenge, and it's something that, you want to be able to tackle. And the goal today really is to share information to help you make an informed decision about how you want to tackle your student loan debt. I know that the ADEA has said that 2019 dental school grads are graduating with an average of $292,000 in loans. And the reality is, if you're not able to pay those loans off in 10 years, then those loans are likely, the debt is going to double. And the reason is interest capitalizes. And so you've got a huge number to begin with. And then you add interest into that, and the capitalization, it makes it very challenging for people. The good news is, we're going to give you some tactics and some strategies today that can help you. One of the first things to do in terms of managing your student loan debt is to really understand what is inside your student loan portfolio. So there's two types of loans that might be in your portfolio. You may have federal student loans, and in fact, you may have a variety of these loans on the screen here that comprise your federal student loan debt. But in addition to that, some people might have to augment or supplement with private, or also known as alternative loans, to meet their college financing gap. And so these two types of loans could be in your portfolio. Federal student loans are not credit-based. You simply fill out the FAFSA each year to qualify for those. With private student loans, they are credit-based. And so, it's based on criteria that lenders establish. And each lender will have, different rates and terms and, other benefits that it just depends, what that lender offers. When you look at your portfolio, the things that are really key to understand, what's your interest rate on that loan? What's the repayment term? What's the monthly payment amount? And is there any kind of a borrower benefit that you wouldn't want to risk losing if you were to do a new loan, either through a federal consolidation or through an education refinance loan? Okay, so you've got to keep in mind that many of you may have 10, 12 loans in your portfolio. And so that's a lot of loans to look at. Call us, talk to us. We can simplify things and help you, net things out. How do you find out where your loans are? So with the federal loans, you'll find them at studentaid.gov. And with your private loans, you can get information on them from your annual credit report. You can pull a credit report, or you can reach out directly to the lender to kind of confirm what your rates and terms, et cetera, are for those loans.
Hey, Lucy,
Now,
you had mentioned some people have maybe 10 or 14 different loans combined that help them get through undergrad and then grad school.
Yeah, absolutely. We see many doctors come to us with 10, 12 loans in their portfolio. Sure, if you went to a private college for your undergrad, it's possible that you have federal loans, but you probably had to take out some private loans also. So the loans can really add up, and then it's cumbersome. And for someone who's in a dental residency program, you're working crazy hours, you've got a lot on your plate, you probably don't have time to manage 10 or 12 loans. It may behoove you to look at simplifying and, consolidating or refinancing into one loan for that reason. Okay, let's move on to the next slide. Alrighty, I'm going to talk about the CARES Act, but before I start that, I just want to touch base on forbearance. So federal student loans do offer forbearance and deferment options for borrowers, in times of need, economic hardship, loss of a job, et cetera. And some private student loan borrowers offer similar forbearance and deferments. However, with respect to emergency payment relief for in light of COVID, if you have private loans, you need to reach out to that lender and ask them what emergency payment relief options they have for you. And I also think you need to be mindful that in most cases, interest is going to accrue on those loans, even though you may have some kind of payment relief with them. So again, with your private loans, reach out to the lender. So let's talk about the CARES Act. So the CARES Act was brought about by the unprecedented challenges we have faced with COVID-19. And it was initiated in March of 2020. And in August of 2020, they extended the CARES Act through the end of December. And then in January, when President Biden took office, one of his first executive orders was to extend the CARES Act through September 30th of 2021. So what does that mean? So for federal student loan borrowers, this is temporary relief. You're not required to make payments right now while the CARES Act is in effect, and there's no interest accruing on your federal student loans while the CARES Act is in effect. So if you're someone who really needs payment relief, by all means, you should take advantage of the CARES Act where your federal student loans are concerned. If you are comfortable making payments on your federal student loans, the great strategy would be this. You've got zero interest. So any payments that you make go immediately to pay down your principal balance. So as you make those payments, you're reducing the overall impact of interest on that loan. So by all means, do that if that works for you. Now, you may have private loans in your portfolio, and it may not make sense to, do an education refinance loan on your federal student loans because you're leveraging that tactic to, reduce your cost of interest. But that doesn't mean that you couldn't take the private loans in your portfolio and take a look at doing an education refinance loan and take advantage of the historically low interest rates in the marketplace today. That's just a couple of options. If you are working toward public service loan forgiveness, you will not want to do an education refinance loan for your federal student loans. And the reason is you would lose that borrower benefit. And we'll talk a little bit more about that in the next slide. So just in talking about, what has happened, there's been so much talk in the news now. However you get your news, whether it's online or, on TV or on the radio about loan forgiveness, right? And Senator Warren has proposed $50,000 in loan forgiveness. Alexandria Ocasio-Cortez has proposed forgiving all of your student loan debt. And then President Biden had suggested maybe $10,000 in loan forgiveness. But here's what we know. Out of the 50 plus executive orders that President Biden has issued so far, aside from extending the CARES Act, he has not done anything about loan forgiveness. And here's why. The federal student loan program significantly funds a lot of government initiatives. One of them is Obamacare. And then there are some other, federal government programs that are funded by the federal student loan program. So there's got to be a lot of math and research done beforehand before they can really do anything with loan forgiveness. So the budget office will have to be working on that. And if you think about it, it's $1.6 trillion in student loan debt. And that's, much larger than the housing collapse. And so, we don't really know what will happen with loan forgiveness. I'm just saying to you that I anticipate that it would take some time for anything to happen. And I don't know what the reality is when so many government programs are actually linked to those federal student loans and require the funding from it. Federal loan consolidation is not credit-based, but what it does is it enables you to combine your federal student loans into one new federal consolidation loan. Now, the interest rate is basically the weighted average of the loans that you put into the new consolidation. And then it gets rounded up to the nearest eighth of a percent. So you can't put private loans into a federal consolidation, and you're also not going to be able to take advantage of the historic low rates that are in the marketplace today, because this just gets, rounded up to the nearest eighth of a percent. So you want to, again, pay attention to what's in your portfolio and what you may be putting into a consolidation loan, because if you've got a lot of debt at a higher interest rate in one loan, that could skew the number up for you. Okay, take that into consideration. And if your credit has worsened or you don't have really good credit, federal loan consolidation might be an option for you, because again, it's not based on your credit score. And if you're working towards public service loan forgiveness, federal loan consolidation really starts the clock ticking for you. You've got to make payments for 10 years. And so in order to start that process, you need to do the federal loan consolidation to get your public service loan forgiveness started. Okay. Private education loan refinancing is credit-based. And so we look at your credit and we look at your ability to pay. At Citizens, there's no fees to do an education refinance loan. So no origination fees, no application fees, disbursement fees, or prepayment penalty fees are associated with this loan. And we'll give you, a variety of options so that you have maximum control and maximum choice when it comes to your interest rate and your loan terms. So we offer both fixed and variable rate options, and then the terms can be 5, 10, 15, or 20 years that you can spread your loan over. And we do have benefits, such as cosigner release, and after you make 36 consecutive on-time payments, deferments, forbearances, and there's loan forgiveness, but I'm not aware of any private lender that offers public service loan forgiveness. This type of loan forgiveness would be in the event of the death or permanent and total disability of the borrower, then that loan would be forgiven. So a little bit different than public service loan forgiveness. So who's good for a private refinance loan? Who would be typical? Recent grads. And, quite frankly, we have a lot of mid-career professionals who are still struggling with their student loan debt and becoming mindful of the fact they need to save for their own child's education or maybe for their retirement. So they need a little bit of money in their budget to do so. Sometimes with the refinance, you can, get a couple $100 extra a month and, use that savings to save for college or for retirement if that's necessary. We also at Citizens see a lot of parents. We have parents who take on their children's college debt from, undergrad. And, in many cases, they help them out with grad school as well. And then they want to refinance it. So we have parent education refinance loans. And it just depends, on your situation. Keep in mind that you can refinance. Just like if you purchased a house, you may know people that are, refinancing left and right today. It's the same type of situation. You can refinance multiple times, based on your situation, what your needs and your goals are. And it just depends. You may want to simplify into one loan. You might want to get a little bit of extra money in your budget. Some people want to take on a greater monthly payment because they prefer to pay their loan off more aggressively. So it just depends on the situation. But again, we're here to help you. So if you want to do a deeper dive into your loan portfolio, again, call us. We're really, happy to help you. And, if it's not good for you, we'll tell you. So because we have a partnership with Henry Schein, we can extend exclusive benefit savings to Henry Schein dental clients. And I'm going to give you a high-level overview of what they are. There's a 1% principal credit reduction up to $1,000 on a new education refinance loan. Now, these savings, and I should back up and say this, and I apologize, but the savings are for you, your spouse or domestic partner, and anyone in your family. So, it's not just you that can take advantage of it. Think about people in your family who may be able to use these benefits. And the reason I say that is because this benefit also extends for private in-school loans for undergraduate and graduate school. So or the 1% principal credit reduction on an in-school loan for grad or undergrad school loans is up to $500. And then in addition to that, there are loyalty and ACH discounts. So for those of you who are not familiar with ACH, it means automated clearinghouse in bank terms. And basically what that is you allow citizens to go in and debit your account electronically each month for the payment. And for that, we would give you a 0.25% interest rate reduction on your loan. Now, the loan limits. The minimum loan amount for an education refinance loan is $10,000, and that can be private and or federal student loans that you're putting into your new education refinance loan. For those folks who haven't completed a degree, have an associate's degree, or have a bachelor's degree, undergrad, the loan limit goes up to $300,000. Now, for parents and graduate students, the loan limit goes up to $500,000. And then for folks that have a professional degree, you can get an education refinance loan up to $750,000. And you'll notice at the bottom of the screen, coming soon, we have a dental residency education refinance loan coming. Monitor the website that we shared with you. We'll share it again at the end of the presentation so that you can get information on that loan product, because that will be great for anyone who's a dental resident to be able to refinance their loans. There's much more flexibility in that for you. Okay, I'm going to just share with you a sample. And, we've got $240,000 on the screen here for the student loan debt. But, the reality is yours is probably much higher than that. So, again, if you want to take a look at what we can do for you, again, go to the microsite, because we do have a rate quote tool. I'll talk about that in a minute. But you can go there and put your numbers in and get a realistic idea of options that you would have. So in this case, Sarah's got $240,000 in student loan debt. Her monthly payment is $2,673, and her goal with refinancing was to lower her payment each month and to also be able to lower her interest rate. So let's just take a quick look. Her current loan was at 6.08% APR. That's the annual percentage rate. So for those of you who might be a little bit younger, if we talk about the interest rate on a loan and then the APR is really the true cost of the loan, because that's got any fees that are added in. So if you remember before, I said to you that there are no fees with the citizens education loans. So this 4.06% rate that we're showing here on the screen is the interest rate also, because there are no fees associated with that loan. All right, so let me go back here. Sorry if I confused anybody, but she's at a 6.08% APR right now. She has a loan term of 10 years or 120 months. Her principal balance is $240,000. And she's paying, over $80,000 in interest, and then the total cost of her loan is $320,000 and change. She was able to refinance with Citizens, and her rate was 4.06%. Again, she decided to refinance over 10 years, and we took that $1,000 principal credit reduction off of her principal balance, and so her principal balance is now $239,000. With the interest savings, she saved $28,691. And then if we combine the principal balance and the interest savings, you can see that overall, she saved $29,691 by refinancing. So, almost $30,000, which is a nice savings for her. When it comes to eligibility, we are going to do things like verify your income. We will look at each application individually. You need to have reasonable debt to income, and your credit. You should be in good standing with your credit. You shouldn't have anything adverse on your credit file. And again, the minimum borrowing amount to borrow for a private education refinance loan with us, is $10,000, and that can be both federal and or private student loans. Okay, so if you wanted to take a closer look at what your options would be, we have a free rate quote tool that is on that customized microsite that I shared with you earlier, and we'll share again. But in addition to that, remember, you can pick up the phone and call us. This really, is our specialty, and we're happy to help you navigate your student loan portfolio and figure out what might work for you. So getting back to this rate quote tool, when you go to custom microsite, you can click on Get My Rate, and it's a free tool, takes less than 2 minutes, and it's a soft inquiry on your credit. So for those of you who, monitor your credit closely and, really prize your FICO score, this will not impact your credit. And it's just a great way for you to be able to explore the options that are available. So you fill in a little bit of demographic information, and within 2 minutes, we've got a range of scenarios for you. So it'll show fixed rates, variable rates, and both of those over, 5, 10, 15, 20-year terms. So you get a really good idea of what your terms look like. It'll share with you the monthly payment amounts for each of those scenarios, and then what the total of the payments would be in those scenarios, and then if there's, any monthly savings. So I would just say, this little green box here, it has 0 in it. There's no monthly savings. And the reason is this borrower is paying their loan off super aggressively. They're paying it off in 5 years. So, that monthly payment increase in order for them to be able to do that, and they'll save money over the life of their loan. Now, if you decide that you want to move forward and apply for a loan, at the point where you apply for the loan, that is where we'll have a hard inquiry, because we're going to go back and we're going to verify all the information in the application, and we'll check your credit a little bit more closely. So from there, we'll come back to you with rates and terms, and you can select your rate and term from there. And then the next step, there's the disclosures that go along with this process. But once you sign and accept, there's a final disclosure that you have a 3-day right to rescind. So it gives you time to review that final disclosure and make sure that you really want the loan. And if you don't, you can certainly cancel it. But what I would say is, if you decide to proceed with the loan, continue to make any payments that come due on your existing student loans, because you don't want to miss those payments and then have, a negative on your credit report. And it does take a little bit of time for us to reach out to all the lenders and get those loans paid off. So what you could do is check with the lenders and make sure the loan has been satisfied or paid off. But in the interim, my best practice suggestion would be to actually make sure you make those payments until you are sure that those loans have been satisfied. So that was a ton of information in a pretty short span of time. I really hope it's helpful. I hope it gave you some food for thought to help you with some strategies to tackle your own student loan debt. Again, the microsite is here, and it's going to be posted. Keith, where will that be posted on Henry Schein for people to access?
It will be posted quite a few different places, so you shouldn't have trouble finding it.
Okay, great. And then in addition to that, again, call us. We're happy to help you and talk through your individual situation and share more information with you. So I think I'm ready to open it up to questions. If you have questions, Keith.
Sure. Thanks, Lucy. This was really super informative. Thank you very much. And
So
obviously, you really know your student loan or arena, and it comes through. So
thank
thank
you.
you, thank you. So
Thank you.
I'm just thinking. I'm not a dentist, but
Mhm.
um, I know through my residence, I've refinanced it more than once in life. Is is it a
Yeah.
parallel? Could if you finance,
Yeah.
can you do it again?
Oh, yeah. So keep in mind, so say you're taking advantage of the CARES Act today with your federal student loans. When the CARES Act expires, you can always go back and refinance again. So maybe if you had those private loans and you refinanced your private loans today and you were leveraging the CARES Act for your federal student loans, once the CARES Act ends, you can go back and refinance. You could combine them or, do a separate refinance for those loans. It's really the same kind of thing. I'm in the process of refinancing my house now. Why? Because the rates are so great. It makes sense for me. And quite frankly, we have people that refinance maybe a little bit over a year ago, and it probably wouldn't hurt them to go ahead and take a look again at the Get My Rate to see what their rate might be, because we're at historically low rates in the marketplace today. So yeah, you can
Yeah,
refinance multiple times.
and you mentioned if you're just looking at that, rate item, that you could do it as what is a soft credit pull? Because you could do it as a
Yeah,
soft pull on your credit. What is a soft
right.
pull?
Yeah. So a soft credit pull, if you think about it, when you open your mail and you might get a credit card pre-approval offer. That's where lenders go in and they just kind of look high level at your credit. They're not doing a deep dive into your debt to income ratio or, other things that they may consider in their credit scorecard. So you can have soft inquiries and they have no impact on your credit or your credit score. But once you do an application, you're actually applying, and that it gives the green light to the lender to do a deeper dive into your credit. That's called a hard inquiry, and that is the inquiry that does show up on your credit report. So soft inquiry, no risk. Um, you know, you actually have soft inquiries from insurance companies. Your mortgage company periodically will do a soft inquiry on you just to kind of check and see how things are. They periodically monitor. Same thing with insurance companies, and they're all soft, and it has no impact on your credit. And a lot of those you don't even know are happening. But the hard inquiry does show up on your credit report. So when you do an application, that's when it's a hard inquiry. But just to get the rate, it's free. It takes less than 2 minutes. And again, you can do that on the website, or you can call us and we can do that whole process and even the application over the phone with you if you want.
Great. Let's talk income. There's two different areas I'd like to talk about. One is there are associates, people have been out there a few years, which, not yet practice owners, and they might have been furloughed during 2020 because practices were closed for a few months, or they were only seeing emergency patients, and a lot of people are paid on a percentage of production or collections, and their
Right.
income has suffered. Is that going to hinder
Right.
them from qualifying?
No, and I would say they should certainly, reach out to us, and we'd be happy to have the conversation with them and help them understand. But, when we talk about, your debt to income ratio, we're talking about, something that's in the moderate range, between 25 and maybe 30%, shouldn't have extensive debt to income ratio. And for people that are maybe a little younger and not really sure about what the debt to income is. So we look at your free cash flow. So we take your gross monthly income. That means, your income prior to any taxes, or anything being taken out. And then we look at your debt, and that's really everything that shows up on your credit report, right? So if you have a mortgage, a car loan, rent would also be included in that debt to income ratio. Credit card, student loans, that all gets factored in there. So, that debt to income ratio should be moderate. Does that help, Keith?
It does.
That
Thank you.
answer it?
And then
Okay.
when the other part about income is sole practitioners, self-employed dentists. You ask
Right.
them to verify their income. So you're asking like me to verify my own income? Is it
Yeah.
Scout's honor?
So, yeah. Right. So if you're self-employed or you're employed by a family member, then we need your last two tax returns. And there's an IRS form 4506T, I believe, which you can complete, which allows us to request your tax form. So, that's the way for us to do that. But yeah, we have a lot of people that have their own businesses that we work with. So yeah, we're used to that. The student lending specialists are really experts at what you need to show and that kind of thing. But that form will help us.
Great. And now there's always been parental guarantors on loans for ages, right. But can somebody do a parent refinance to help their college grad child?
Sure. So, and we see that a lot. So if they've co-signed on their child's loans, then they can, certainly do an parent education refinance right out of the gate.
So what are the requirements around the parent education refinance loan?
They're the same. You've got to have good credit. We're going to verify your income. Again, minimum amount to refinance in federal and or private loans is $10,000. We frequently lend out, $500,000 to parents to do refinances. Sometimes, a parent has a student that's graduated and they may have another one in college. And so we let them actually combine those loans for both students into one parent loan as well, even though the one child hasn't graduated yet.
Yeah,
did that answer your question?
It does. Thank you very much. Not all that long ago, there was a Wall Street Journal article about a dentist who actually had hit the $1 million mark of student debt. But that's obviously an extreme case. But I've been going to dental schools doing lunch and learns and speaking for a while. And then years ago, I would ask people how much debt they have, and there was typically one person that had more than 350 or 400,000. Now it's probably a third of the class.
Right.
But
very true.
The SBA does rate dentists the least likely to fail in government speak of negative, because they do have the ability to earn and the ability to pay off their loans, and they do it well. So it's more of the case to refinance, so you take advantage of the lower payments. So
yeah.
So my question, I'll just go with. So a lot of people, have a spouse or a partner that has undergraduate or graduate debt. Can they refinance this through this program and receive the same benefits as well?
Yeah, so the benefits are available to Henry Schein dental clients and their families. So spouse, domestic partner, siblings, children, your family, your immediate family, anyone in your family can take advantage of those benefits. Certainly. You
have a pretty big team behind you. Citizens Bank is, a very large financial institution, and you're a top tier, highly reputable player in this market.
Yeah, and really the advantage for you is, we've been doing student loans for over 40 years. And so we've got a lot of expertise. We're not, a startup online lender that just started. We have, a lot of breadth and depth of knowledge and experience. And you can see that with our call centers. Great.
Lucy, you've been wonderful. On behalf of the Henry Schein Dental Academy and our webinar series, we thank you very much for enlightening the listeners, because it's really relevant and really important to seize the day. So thank you very much.
Thanks, Keith. Appreciate the time, and best of luck to everybody trying to tackle their student loan debt.
Great. Thank you.
Thank you.